Welcome to Investors Insights. This week's topic is GDP surprises. Will it last? Guys, a lot going on. We've been saying the past couple of weeks that we're seeing the economic numbers better than expected, and better than what the economists are seeing. And we got confirmation from that last week from the GDP report. So Adam, talk about that.
Yeah, GDP numbers came out, 3.2% for the first quarter, best in 4 years since 2015. So that kind of crushes, the slowing of global growth.
Yeah, so I mean, part of it is, look, we see GDP number come out. It really beat expectations, great. But as investment advisors, we look at the good and the bad. And while the overall number was really good, there were a couple things that we're looking at more closely. Ashley, talk about that.
Yeah, if you look at it, Adam's right, the absolute number is excellent. But if you go a little bit deeper than that, all of that growth in the first quarter came from more volatile categories. And what we mean by those are the things that can swing the most and hard to predict. The first one is net exports. That added about 1.03% of that 3.2. The second is inventory growth, and the third is state and local government. So it's great to have a quarter like that, and every once in a while you need a pickup quarter like that, but you have to be careful because those are more volatile categories. The flip side of that is positive though, is the consumer was really kind of low in the first quarter. So were auto sales. Remember, we had the government shutdown. That drug about 0.3%. So what's good potentially for the rest of the year is the consumer coming back, autos coming back, major federal government coming back is a lot more reliable, a lot more sustainable. Mm-hmm. So we could continue to have good numbers for the rest of the year on the things that are not as volatile as they were in the first quarter.
Yeah, so especially the inventories.
Yes.
So the inventories, while we look at inventories, that means bigger production. Did that big number this quarter, will that drag it down in the future?
Correct.
So watching that carefully. And then Trey, talk about the Fed. He had a really good GDP report. The Fed's seeing that. They meet this week. Talk about that.
The Fed's meeting this week. So far this year, the Fed meetings have been really non-issues because everyone, at the end of last year, the Fed was way too aggressive or hawkish, as we say, and then they realized that kind of came off and said, they're going to be dovish, not going to raise rates. But that was on the assumption that we were going to have a weak first quarter. Well, as we've said, the first quarter was much stronger. So will the Fed react to that? Will they be a little less dovish? Will they start talking about maybe being more aggressive, maybe raising rates again, as opposed to the theory that they may cut rates? Mm-hmm. So I think a lot of the assumptions about how the Fed was going to talk and act this week were built on a 2.5% GDP, right, or a 1.5% GDP. A 3.2 is way above what the Fed was predicting. And so does that change the way they look at the economy? It'll be the markets, as we remember, the fourth quarter of last year, the markets extremely reacted to every word the Fed said. So will we see that come back this week? Something we're watching closely.
One good thing about that is, though, this time, that core inflation is still real low.
Very good point.
Because, that volatility we just talked about, we're kind of in some of those extraordinary categories, but it didn't hit inflation. Mm-hmm. Yeah. So we had that growth, but not much core inflation. Yeah. That may help us.
Yeah, and we'll get the PCE inflated this week as well. That'll be something the Fed already has, and hopefully we'll take it into account. So we're kind of a Goldilocks. Good point. We're getting growth, but no inflation. So what the Fed is supposed to fight inflation. So last year we argued that a lot. The Fed was fighting a battle that it already won. So hopefully maybe they learn their lesson.
Yeah, so we had GDP surprise to the upside. We're having earnings come out surprise to the upside. 80% of companies are beating expectations, that are the bottom line expectations with earnings. So that's another good upside surprise. So again, a lot going on. If you have questions about how this impacts your portfolio, please give us a call. We love to talk about it. Have a great week. Thanks.